Hello, welcome back to Campus Zealand Media. Today we are going to be looking at royalties, some of the common terms used in royalties. Then we are also going to be looking at the accounting entries, what you are supposed to be doing, for instance, in the books of the landlord and the books of the tenant. So now we are going to be looking at some of the common terms that are used in royalties, because normally part of the question normally states they can tell you to distinguish between maybe short workings and minimum rent, or recoupment of short workings and maybe minimum rent, anything. So you need to just know the some theory which is behind the royalties. So you are going to start by defining what a royalty is, and we'll say a royalty is simply remuneration given to a person in respect to use of that asset for. So we were saying that royalty is the remuneration payable to a person in respect to use of his asset, and that you are going to see that it is going to be calculated based on either the unit sold or output. So in the question you are supposed to check out for is the royalty calculated based on the unit sold or the output. Very key to note. Then minimum rent, sometimes they call it dead rent, sometimes you may see some questions saying calling it flat rent or rock rent. This one is the minimum amount of money that you are supposed to that the lessee is supposed to pay to the landlord, even if the lessee hasn't derived any benefits from using that asset. Minimum amount of money that the lessee pays to the landlord, even if he hasn't derived any benefits from using that asset. Then short workings, these ones are the excess of the minimum rent over the royalty. As long as the minimum rent is above the royalty, that excess is what we call short workings, which you can take as zero losses maybe if you are the lessee. Then recoupment of short workings, basically we look at in the question we look at for either is it fluctuating rate of recoupment or a fixed rate of recoupment. So for fluctuating rate of recoupment, you are going to see that for it you are supposed to be the question will always state that the power to recoup short workings will be exercised or extinguished 1 year or 2 years or 3 years after the year to which short workings relate. So you have to look out for that, as long as they say it is to be extinguished after the year or the following. Of course, when they say the following, is same as after the year to which short workings relate. So we shall call that fluctuating rate of recoupment. We are going to be seeing it in the calculations. Then fixed rate of recoupment, of course, this one you start counting from the period of the lease agreement. So we are going to work out this first number, question 1, whereby we are going to look out for a question. In the question, you are going to be looking out for terms like minimum rent, then the royalty that is supposed to be paid, and we see is it computed on the sales or on the output. Then also the power to recoup short workings. Is it a fluctuating rate of recoupment or fixed rate of recoupment? Then we are going to still be seeing the units of output. We are going to first of all draw the analysis sheet, and we show you, because it is the analysis sheet that guides you when you are passing the other double entries. So according to the question is displayed, of course you are going to see that always in questions of royalties you have to start with the analysis sheet, whereby your analysis sheet must be comprised of the output or the sales, depends on what your royalty is based on. So your royalty, then the minimum rent column, the short workings, then short workings recouped, short workings recouped, then payment to the landlord. So when you check out for our question, we have output figures. They were given, they say during the first 4 years of the contract. So the royalty is based on the first 4 years. That's why they don't specify in the years. That's why I'm going with the option of recording year 1, 2, 3, and 4. The output that was given was 5,000 first. So I recognize that 5,000. Then 4,500, 4,700, and lastly 6,000. So when I check out for my question, because you compute the royalty based on this first column, in my question they told us that in the question 1 they told us that the agreement provided for the payment of royalty at 20% per litre of oil removed, at 20 shillings, 20,000 shillings per litre, 20,000 shillings. So it means you are going to be multiplying 20,000 times the output to get our royalty. This royalty is based on 20,000 shillings. This is the royalty. So according to our question, we've seen that royalty is calculated on 20,000 for each litre, and here these people are having 5,000 litres in the first year. So 20,000 times 5,000, of course, you are going to get 100 million, which I'm going to record as 100,000. I'm reducing the zeros, you reduce the precision, because the space may not be enough. So these zeros up, it means that this figure is not 100,000, but 100 million. Then when you multiply this still 20,000 times the second unit, these litres of oil, you are going to be getting 90,000. Then when you multiply 20,000 still times these liters of oil, you are going to be getting 94,000. And lastly, when you multiply this royalty times 6,000, you are going to be getting 120,000. So this is 120 million, this is 94 million, because we just reduced the zeros to minimize space. Then, according to my question, still the minimum rent, if you check, the minimum rent was 100 million. Minimum rent was 100 million. So since it is constant, of course I maintain it 100 million. So I record 100,000 because we reduced our zeros. Still I record 100,000, 100. So remember, when you reach this point of the minimum rent, you need to be careful, because some questions, it is not a must that minimum rent must be constant. Sometimes they may specify that minimum rent is 100 in the first year, then maybe 100 in 2,000, 200,000 in the second year, and then other years they give you a given figure. So you have to be very cautious about the question. It is not a must that it must be constant. Then now we start. Obviously, after filling our output column, then reality, then minimum rent, now we have to start to compare. We compare the minimum rent column with the reality column. You see. So obviously here you are seeing that your reality is 100,000 and your minimum rent is 100,000. So it means we don't have any short workings. We don't have any short workings recouped. We don't have any short workings recouped. Then payment to the landlord, of course, you pay them the same reality, which is 100 million. 100,000. I reduce the zeros. Then when you got the second year, you are seeing that we have short workings. As long as the minimum rent column is greater than the reality column, what you are supposed to pay is less than our minimum rent. Meaning that here you have short workings. You are supposed to pay the royalty, but you are not supposed to go beyond the minimum rent, because the minimum rent comes in whereby the lessee hasn't derived any benefit. So here you are seeing that we have short workings of 10,000, meaning 10 million, and we don't have any short workings recouped. We don't have any short workings recoverable, but you have to pay the greater of the minimum rent and the royalty. So for us, we are supposed to recognize which one is great of the two. It is 100 million, so I recognize it in my payment landlord's account as the payment. So 100 million. So when you check the question, they told us that the part recoup short workings. So in our question, they told us the part recoup short workings is to be extinguished within 1 year after the year to which short workings relate. Meaning that since we have gotten short workings in this year, the only way of recouping it is within 1 year after the year to which short workings relate. Meaning, since we have made short workings in this year, we can only recoup it in this following year, because they have said within 1 year after the year to which short workings relate. So I have to check. I can only recoup this short working in this year. Otherwise, if I can't recoup, in other words, if I compare and I make a loss in this year, it means this one I will record it under short working is recouped, because I have no chance of redeeming it again. So I check. You are seeing that in this year still I have short workings of 6,000. And when you have short workings, it means you can't recoup, because the mere fact, if you attempt to recoup the 10,000, you're even going to go below your minimum rent. So we maintain the 6,000, the short workings in this year. Now this one becomes irrecoverable because we can't recoup it. We have also made losses in this year. So this 10,000 becomes short workings recouped here in this year. Then we don't have short workings recouped here. So now we compare the figures. We have to pay the greater of the minimum rent and the royalty. The one that is greater is the 100 million. So I recognize it here. Then it means now, since we have also short workings in the third year, they told us the power is to recoup short workings is to be extinguished 1 year after the year to which short workings relate. It means that these short workings, I can recoup them in this last year because it is the year after. So I check whether I made a profit. When you compare the two figures, of course you are seeing that you made a profit. The royalty is greater than the minimum rate, meaning that you can even recoup and remain with some amount of money. So it means this 6,000, for it I'm going to recognize it in this year as a recouped. Short working is recouped. I don't have short workings. Then I don't have short workings recouped. So when you subtract 120,000 from 6K, you are going to be getting 114. So you compare the remaining figure, 114 to 100. You are seeing which one is greater. Of course, 114 million is greater, so it means I take the greater. 114 million. So in the third year, we said we made short workings. And in the question, they mentioned that the power to recoup short workings is to be extinguished within 1 year after the year to which short workings relate. Short workings are relating to the third year. So it means the only power to recoup them is the next following year, within 1 year. So when I check this year, of course, you are seeing 120 versus 100. 120 is greater. The royalty is greater. Meaning that I can even get power to recoup this 6K in this year and remain above my minimum rate. It means that now you are going to recoup this 6K. You have the power to recoup it in this year because you are making a profit already. And when you recoup, you are going to be left with 114 in this column. And that one, when you compare that 114 left with the 100, of course 114 is still greater. So we take the greater of the minimum rate and the royalty, which is this 114. So based on our analysis sheet, we are going to start passing the double entries for each year. So you start with the first year. Of course, the first year, in the question, they asked us for the royalty account, the landlord user account, and the short working user account. So we are going to start with the royalty account. In the first year, of course, the royalty we are supposed to pay is 100,000. So I forgot me because they have told me to prepare the account of the landlord, meaning that I must be a tenant, because the relationship between, it's like what happens between the head office and the branch. Here, if you are the tenant, you are supposed to pay the landlord's account. But if they tell you to pay the tenant's account, it means that you are the landlord. So the mere fact that they have told us to pay the landlord's account, we take ourselves as the tenants. So we start. The royalty is supposed to be paid in to the tenant. This one is an expense. You recognize an expense increasing by debiting. That is 100,000. Of course, this is 100 million. That's why I've put the zeros here. Reduce the procedure. That is in the first year. First year, 100 million. So you pass the debit. Of course, the credit goes to the landlord because this is an expense and the liability is increasing. You have to pay this landlord this money. So we credit the liability increasing with royalty in the first year of 100 million. So I've passed the debit and the credit goes to the landlord's account because the double entry is debit royalty, credit the landlord. Then still in the first year, they did not ask me for cash account. Otherwise, I would have debited the landlord's. I would have credited my cash, then debit the landlord. But the landlord has to be debited because at the end of the day we pay him. But they haven't asked us because they double entry for payment. We debit the landlord to show a liability reducing, then we credit our cash. But they haven't asked us for the cash account, so we only pass one entry of debiting the landlord to show that a liability reduced because we paid them. So I put cash here in the first year, which is 100. So they haven't asked us for the cash account, that's why I'm passing only one entry in respect to a liability reducing. Then we go to the second year. So after the first year, of course, royalty is supposed to be balanced off the profit and loss. So we balance it off the profit and loss after the first year, which is 100 million. Then, of course, here you still balance off the landlord's account. In the first year, we are left with no balance. Then we go to the second year. Second year, the royalty that's supposed to be paid is 90,000. So I recognize it as an expense increasing. I put 90,000. Then I complete the double entry by showing the liability increasing at the beginning. So which is royalty of 90,000 in the second year. So this is our royalty of 90,000. Then I go to, we have short workings. Short workings are expenses to the what? To the tenant. So you have to recognize that expense, which is 10,000. So short workings, 10,000. That is debiting the landlord. The detail must be, you must debit short workings using the landlord, then you come and you credit the landlord using short workings because the amount of money you're supposed to give the landlord increases. So short workings, 10,000. Then I go to what I've paid in this year, second year. I've paid 100,000. When you pay the landlord, you are supposed to debit the liability reducing. So debit cash of 100. Now you balance off the accounts, of course, in the second year. This was the first year. This is the second year. Still first year, second year now. So when you balance off this account, of course, you are going to, in the second year, you close off the royalty account, the profit and loss, which is 90,000. Then when you balance off the landlord's account, of course, this side you have 100,000, and this is 10 plus 90, of course, that's 100,000. So no balance remains. Of course, okay, let me do this. This is 100,000, this is 100,000 still. So we don't have any balance. Then we go to the third year. So the third year, of course, the royalty is 94,000 or 94 million. So I debit that expense in the year 3, which is 94. Then I complete the double entry by showing the liability increasing here. Third year, royalty of 94. Then I go ahead to look for the short workings. The short workings, of course, they are expenses. We debit to them landlord as the detail, which is 6,000. Then, of course, when you credit debit short workings, you recognize the liability increasing because you have to cater for those short workings, which is 6K. Then after that, you have payment, the landlord. You paid 100,000. When you pay, the liability reduces. So that year still lost cash amounting to 100,000. So you balance off this account in the third year to the profit and loss, the royalty account, which is 94,000. Then you got the landlord user account and you balance it off in the third year. Of course, this side you have 100,000, and this side you have 100,000. So also this year is done. Then when you go to the last year, so in the third year we are left with short workings irrecoverable, which is 10,000. So we credit the short workings account because we are allowed to recover with the profit or loss, because we are supposed to be passing the opposite end with the profit or loss account. So this is 10,000. So that year is complete. Then we go to the last year, which is the fourth year. The royalty to be paid is 120. So this is the fourth year. The royalty to be paid is 120. I hope this doesn't confuse. So the royalty to be paid is 120. Then I complete the double entry by debiting the landlord's account. Crediting the landlord's account in the fourth year with royalty of 120. Then of course here the details has to be the landlord for this side, landlord, but this one is going to confuse. Let me just put landlord all these for all the years. So this is landlord. This is landlord, but this is the first year, second year, third year, fourth year. So we got to we have passed the royalty, the double entry for royalty. Then we have short workings recouped. When short workings are recouped, did I record this 6,000? Okay. So for the last year, short workings recouped, we are supposed to be crediting the short workings with the landlord, which is 6,000. Then I pass the opposite entry in the landlord's account to show that he reduced. That is because this is the debit, this is the credit entry, the debit has to be this side. Short workings recouped, which is 6,000. Then the last we record the payment. When you pay, a liability reduces. So in the fourth year still, our cash, we lost cash amounting to 114 million. I think that's the last entry. So you can balance off the accounts profit. In the royalty account, we close it off the profit and loss in the last year, which is 120 million. Then we close off the landlord user account. This side we have 120. Even this side you have 120. Yeah, that's it. So you're going to see that for the landlord user account, it always balances off automatically. And this royalty user account, we close it off the profit and loss. But in another case for the profit and loss account, that's why it is not displayed in this working. So also when you balance off the short workings account, and in case we get a balance, we are supposed to recognize it in the profit and loss as an expense. So when you balance off the short workings account, you are going to see that we have 16,000 this side, 16 million because we reduced the zeros, but we don't have any balance. But in case we have a balance, which is always on the credit side, we have to recognize an expense in our books of accounts. So because in case we had a balance on this side, to be maybe a given figure, we are supposed to recognize that. We take that figure to the profit and loss account to recognize expenses relating to short workings. But we don't. First, so we are going to do another question in respect to what? To royalties, whereby you are going to see a scenario whereby they tell us that our royalty is calculated based on the sales figure of what we sold, because royalty is always based on either the output you produce or the sales. So that question that we are projecting now is what we are going to be handling. Question 6. Basically, we are going to be preparing. Of course, we are going to start with our analysis sheet. Then we shall go to preparing the accounts that are required: the royalty account, short workings account, and Venus account, whereby Venus is our landlord in this case. So when you check that question, they have given us of question 6. They are telling us, if you read the question carefully, they are telling you that when you read that question you have just displayed, they are telling us that the royalty is calculated. The royalty shall be 10% of the sales on the sales, meaning that in our analysis sheet, instead of having output here, we must have sales, because most questions it is either calculated based on the sales, the amount of goods you sell, what you get from the sales, or based on your output. In this case, they told us sales. But when you check the question still, you're not seeing sales figure anywhere, yet they gave you the output, what you produced in a year. For instance, in the first year, they are telling us that we produced, in the first year, year one, I mean, 2010, not year one, but 2010. In 2010, they are telling you that you produced, your total production was 10,000 units. But this is what you produced as output. But at the end of the year, you had 200 units in your premises. Meaning that what? Since what you produced, your total output is not equal to what is remaining at the end of the year. Meaning the balance, you must have sold that balance, the difference, the units that are not here in the closing stock must have been sold. So it means we get 10,000 minus the closing balance to get the units that were sold, because they are not part of our closing stock yet. The total output we produce is 10,000. So 10,000 minus 200, you get 9,800. This one gives us the units that were sold. So if we get the units that were sold, this is just the units that were sold, the output that was sold, but it is not the sales. Sales, we have to get now 9,800. Then we multiply it by, they gave us the unit, the price for each unit. In the question, they told us that the soap was priced at 15 shillings each. So it means I multiply this by 15, then I know my sales figure, the figure I'm supposed to recognize here. So like we've been saying, now like in our first year, you are going to see that you are going to be employing this formula to get the sales. The quantity of sales is going to be equal to the output minus the closing stock you'll be getting. Now, like for instance, in the first year our output was 10,000, the closing stock was 200. So when you subtract our output 10,000 minus 200, you get 9,800. So that is the quantity of sales we made. But they told us each unit is 15 shillings. So I multiply 15 times this quantity of sales to get my sales, the total sales I made. So this is 147,000. So you do that for all the corresponding years. If you check the second year, you employ the same method, you are going to be getting the second year as 238,000 here. Use a red marker. So now that's how we got our sales. But you find questions whereby they give you the closing stock. Maybe in this case, for instance, let's say they have given us that our closing stock is 200. This is closing stock. And then these are our sales. Then in the question they tell us that the royalty, our royalty is calculated based on output. Because you have to take note, the royalty can be calculated based either on sales or output. So they can give you this in your data. They give you as the sales figures and the closing stock figures. So it means if they tell me that the royalty is calculated based on output, I don't have to have sales here. I must know that my output must be equal to what I sell plus what remains in the closing as my closing balance inventory, closing stock. What remains, my output, what the total figure I produce must be equal to what I sell minus the closing stock. So in scenarios whereby the rate is based on output, yet they are giving me the sales and the closing stock, it means to get my output, because here I can't put sales, yet they have told that it is based on what? On output. So what you do, you just add your sales figure plus the closing stock to get the total output, which you're supposed to recognize in this column. So you are going to see that this formula is, of course, it is related to this formula, because here we are looking for sales, but here in the other question, when they say the rate is based on output, you'll be looking for the output. So you just make output the subject, whereby you are going to be adding your sales to the closing stock. So they told us that our royalty is 10% of the sales figure. So I'm going to be getting 10% times this figure to know my royalty. So when I get 10% of this one, I'm going to get 14,700. Then 10% on this one, I'm going to be getting 23,800. 10% of this, you get 28,500. Then still you'll be getting 31,500. Then this is 42,000. That's my royalty. So I recognize my minimum rate at 30,000. It was constant. You have to check the question, because sometimes it is not a must that the minimum rate must be constant. Sometimes, like we said in the previous example, they may tell you in the first year it was 30,000, second year 20, third year 15, then the corresponding years maybe 10. So you have to check out, but this one was constant. So we have drawn our analysis sheet from the sales, royalty, and the minimum rent. Now we are going to look out for short workings, because to look for short workings, you look at the minimum rent column and the royalty itself. So you check, minimum rent is above the royalty. Obviously, that one we call it short workings, because what you are making is less than what you are required to pay. So when you subtract, you are going to be getting 15,300 as your short workings. Of course, in the first year, you cannot have short workings recouped, and you cannot have short workings recovered. In the first year, if you have figures here, you just know that you are committing crime. In the first year, you cannot have short workings recouped, and ill-cooked. So the payment to the landlord, of course, we look at it, we pay the greater of the minimum rent and the royalty. Which one is greater? It must be this one because it is greater than the other one. So 30,000. Then you go to the next year. Next year, you are seeing that when you compare your royalties figure to the minimum rent figure, still it is less. It is less than this. The royalty is less than the minimum rent. So I subtract to know how much it is less. It is 6,200. So when I get 6,200, of course, they told us in our question that the part recoup short workings within the first 4 years means that you are going to start, when they say within, you are supposed to start counting from the period of the lease agreement, the first year, second year, third. So we have the part recoup starting from this year to this year up to this 4th year. So when I check this, of course, these short workings, I can't recoup them in this year yet. I've made the loss again. You are only supposed to recoup when you have made the profit. In other words, when this figure in the royalty column is greater than the figure in the minimum rent column. So we don't have short workings recouped, we don't have recoverable, but when we are paying the landlord, we pay the greater of either the royalty of the short work or the minimum rent. So this is greater still. So we pay 30,000 to the landlord. Then I go ahead. When you check this, still it is a loss. It is a loss when you compare the royalty versus the minimum rent column. It is a loss. So when you subtract, you are going to be getting 1,500 as your short workings in this year. Of course, this one we couldn't recoup this figure. We can't recoup this figure because still here we are making the loss. You only recoup whereby you get a year whereby this royalty is above the minimum rent, but it's still less, so we can't recoup. But we still have a chance to recoup because they said during the first 4 years. That's why I'm not recording. This one I did not record it here. Even this one I can't record it here because I still have an extra year where I can recoup. So we don't have recoup, we don't have irrecoverable, but we have to pay the greater at the end of the day to the landlord, greater of the minimum rent and the royalty. Which one is greater? Then I go to, this is a comma. Then when I go to this year we are having 31,500 and this is 30,000. You are seeing that we made a profit because this one is greater than this one. Profit of 1,500. So it means because the total of these short workings, when you add them up, you have so when you take note, we are in the 3rd year, but I mean in the last year, and it's where we are supposed to end recouping according to the question. They gave us the power to recoup within the first 4 years. This is the 1st year, 2nd year, 3rd year, 4th year. So in this year, we can still we have the chance to recoup because we are seeing that we made a profit. This figure is above this, but we can't recoup below our minimum rent. We can't recoup below the minimum. So it means on this figure you can only recoup 1,000 because the royalty is 31,500, but our minimum rent is 30,000. So it means here you can only recoup 1,500. Otherwise, if you go below 1,500, you are going below your minimum rent, which isn't allowed. So here you have to recognize that in this on all of these short workings, you can only recoup maybe only this one. Okay, 1,500 will be the sum of those, because the sum of this, if you get the sum of this, you get 23,000. So on that 23,000, you can only recoup 1,500 on the short workings, which I recognize in this column as short workings recouped. Meaning that since this is the only chance to recoup, the remaining balance must be recouped because we no longer have any chance to recoup. So it becomes 21,500 as the recouped because we don't have any other chance of recouping it. But when you check, it means that when we recouped here 1,500, we remain with this column remained with 30,000. When you compare the two figures, of course 30, you have to pay 30,000 because they are the same figures. Then lastly in 2014, you made a profit of 6,000. You made a profit of at the rate and the minimum rent column in the last year. Of course, we have 12,000 in excess above. So we pay the great obviously because we don't have any short workings. We don't have any short workings recouped, but we have to pay the greater at the end of the day. Which one is greater? We compare. This one is greater. So here you pay 42,000. So others, now you go to, when you check the question, you asked us to prepare the short workings account, the royalty account, and the Venus account, which is the landlord. So you can have your short workings somewhere here.
Go.
So since the question requested us to prepare the royalty account, it is here, royalty account. Then the Venus account, who is our landlord, so this is the same as landlord's account. Then this is the short workings account. So you look out for the royalty. It's here, royalty payable. It is 14,700 in the first year. That's an expense to you. So you recognize that expense this side, landlord as the detail. Then you copy the double entry in the Venus's account because the double entry is debit royalty credit to the landlord. So it shall copy the double entry this side royalty. then you put that figure 14,700, the first figure. Then you go to short workings. Of course, minimum rent you don't record it. Then you go to short workings, an expense to you. You debit that short workings over 15,300 to the landlord. Then you recognize the landlord increasing because of short workings in your books or account. Then payment, when you pay, of course, liability reduces, you lose money. So you debit, you credit your cash or bank, then you debit your landlord with 30,000 still. So you just be passing the double entries. That's not, the analysis sheet is what you're supposed to understand. Then these double entries can be very, very easy. So in cases of years where we have short workings recouped, you're supposed to be crediting your short workings account, then you pass the debit entry in the landlord's account. But for short workings recovery, recouped or irrecoverable, you're supposed to be still crediting the short workings account, but you complete the double entry in the profit and loss account, which is a task tier. So for short workings recouped, you are saying that you will be crediting the short workings account by putting profit or loss. Then you are supposed to debit the profit and loss with short workings recouped because it is an expense to you. When you are debiting profit and loss, you are recognizing an expense increasing. Yeah, that's it. You balance all the accounts at the end of the day, and then you close all of the accounts to. For instance, royalty for us, this one we shall close it off to the profit and loss account. Of course, these ones are going to keep balancing. The landlord's account must balance off automatically. You must have no remaining balance. And that's it. So short workings account, for it you balance it off. Then if you don't have any balance, of course it will balance automatically. But in case you have a balance, which is most times on the credit side, you have to close it off the profit and loss by recognizing an expense. Short workings, an expense. Yeah. So this is all for royalty accounts. We are going to be now looking at other numbers relating to other topics. For instance, container accounts, hire purchase, and what? Container accounts, hire purchase, leasing. Yeah, basically that.